Hello everybody and welcome to this edition of Inside Insurance, where we're going to have a special focus today on the CSRD post-Omnibus. My name is Jean Ray. I'm a consulting partner here at KPMG and I'm your host for the series. Today I'm delighted to be joined by Lorraine McCann. Lorraine is a Managing Director in KPMG Sustainable Futures Practice and she is the Sustainability Reporting Lead for KPMG in Ireland. She brings over 15 years' experience in the provision of sustainability advisory and assurance services and has served, I think, over 100 clients across various sectors, including financial services and insurance. Over the past 2 years in particular, she's been supporting clients with sustainability regulatory compliance, in particular the CSRD. So thanks for joining me, Lorraine. CSRD, obviously, very hot topic, in particular over the last few months with the Omnibus proposal. And I suppose we might start with that, just to level set, I suppose, where we are now and I suppose the current status of where we're at.
Yeah, perfect. Thanks very much, Jean. So, look, I think the CSRD has come with fairly significant challenges, it's fair to say. In essence, it was a reporting regulation impacting about 50,000 companies all across the EU with over 1,200 data points, some companies having to report all that, as early as 2024. So, it was a huge challenge for organisations. In reality, it was far too onerous, right? They've recognised that actually trying to comply with the CSRD was impacting on the competitiveness of these organisations. And so the EU Omnibus proposal actually sought to try and simplify how do we actually reduce this reporting burden that we see on organisations. And, I think, as we reflect on, some of the conversations I was having with some of the heads of sustainability that I would work with on a day-to-day basis, many of them were telling me, we're just reporting. We've a huge amount of work to do around decarbonisation. What does supply chain sustainability look like? How do I actually even measure and improve my sustainability performance? None of that was actually getting done. So, certainly the Omnibus proposal was welcomed by companies. But even, for ourselves here in KPMG, it means organisations can actually now get back to the strategic drivers of sustainability that I think was largely being missed.
And I suppose just in response to some of those challenges in terms of moving things along, getting work done, maybe less focus on the reporting side and more focus on the doing side, I suppose, maybe just to summarise, I suppose, how has the Omnibus, responded and what's in there in terms of trying to help companies move it all along?
Yeah, absolutely. So the Omnibus proposal, it set out three key components. The first one was they set out what they call the stop the clock measure. So effectively what that is, if you're an organisation that would have been in a wave 2, they called it, what they've said was, we're actually going to give you 2 more years now. So instead of having to report in 2025, you'll now be reporting in 2028 on your 2027 information. So that stop the clock measure has been a really welcome proposal, to be honest. That has been accepted by the European Commission and it will be formally transposed into Irish legislation by the end of this year. So, if you're a Wave 2 organisation, good news, you have 2 more years to prepare. The other key changes that was proposed was in terms of the scope of the CSRD. This one has a few more question marks over it. In terms of applicability thresholds, they have suggested increasing the applicability thresholds from 250 employees to 1,000 employees and either 50 million euro of turnover or 25 million assets on the balance sheet. That's a change from the applicability scope that we saw or that sits in the CSRD regulations today. It's not a done deal as to what those applicability thresholds look like. There's some rumblings. Will it be 500? Will it be 3,000? You can see that the scale of which the applicability thresholds, what that can look like still remains to be seen. So it's a bit of a watch this space on where we'll go from a regulation perspective in that regard. And there was also proposed changes for the EU taxonomy thresholds as well. So again, they said, yes, we're expecting to introduce the applicability thresholds to 1,000 employees, but more than 450 million of turnover. So again, if you don't hit those 2 thresholds, you'd be expected to fall out. But again, let's see where the applicability thresholds lands. And then there was a final change which the Omnibus proposal has suggested. Again, this one's very welcomed, which is let's look to reduce the European Sustainability Reporting Standards, or the ESRS. I mentioned there's 1,200 data points if everything is in and everything's mandatory. they've recognised that's far too much.
Yeah.
So how do we actually scale that back? And they've indicated that they will be focusing on what are the quantitative disclosures that would be required, and also what are the mandatory disclosures that would be required for organisations. So we are expecting, a fairly significant scale back of the extent of sustainability reporting requirements under those ESRS standards. And I suppose, for those out there wondering, time-wise, when can I see the reduced requirements? We will see a draft. It's expected to be published in July of this year, and it will be finalised by October of 2025. So towards the end of July, watch the space, and we should see what those reduced ESRS requirements look like.
And you mentioned some good news for Wave 2 reporters there. I suppose those in scope of Wave 1, though, will have many of them already reported, I think. So I suppose any key learnings or key observations that might be useful for those joining us today?
Yeah, so we were pretty interested to see, what are some of the common themes coming through from those organisations that would have reported as part of the Wave 1. We undertook a bit of analysis, and we continue to analyse those organisations that have published their Wave 1 reports. We have published a report called our Fast 50 report, so that's sought to actually tell us, what are we seeing all across the Wave 1 reporters so far. The first thing that we saw was in relation to the double materiality assessment. So many organisations will likely be familiar with the double materiality assessment concept. You've either already gone through it if you're preparing as a Wave 2 organisation, or you might be thinking of doing the double materiality assessment. And one of the critical components in that is looking at your impacts, risks and opportunities. So what we found was the range of impacts, risks and opportunities ranged from as low as 9 up to as high as 93 material impacts, risks and opportunities, with the average number actually coming out at 32. So again, you can see quite a wide swing in terms of the number of impacts, risks and opportunities that were flagged as material. The other thing we were pretty interested in was the spread across impacts, risks to opportunities. So about approximately 49% of a company's IROs were allocated as impacts, 37% were risks, another 14% were opportunities. So, if you're looking at your own double materiality assessment process, have a think about where you might land in the context of understanding some of those insights that we now know about the DMA process. And certainly for some of the clients we've been working with, if they've already done the double materiality assessment, they're thinking, maybe I should look at it now again through this lens. Is there a way that if I've maybe had too many material impacts, risks and opportunities, are there further opportunities to slim that down now, being able to get the benefit of some of those lessons learned? So certainly a lot of learnings on the double materiality assessment. The other observation we had was that companies were actually particularly strong on climate reporting. So not hugely surprising when you think about, up to CSRD, we've had the Task Force for Climate-Related Financial Disclosures. We've had CDP, which encourages disclosures on greenhouse gas emissions. We have science-based target setting, which is an expectation from many organisations as well. So we saw, a fair level of maturity around climate reporting. Something that struck me quite, which I thought was quite interesting, it was the actual number of clients that set net zero targets. So actually 62% of those companies we looked at had a net zero target, and 86% of them actually disclosed on their climate scenario analysis. So what that tells us is companies, even regardless of CSRD, they're looking to understand, what are my greenhouse gas emissions? What are the key climate change risks and opportunities facing my business? And then how does that feed into decarbonisation pathways, transition plans? So these are fundamental steps that could actually be taken regardless of CSRD. So, as you think about what happens in the in-between phase now, there's some of the elements that we see improving anyway. And then the last point I'll just say around some of the observations we had from looking at the Wave 1 reporters was that there was a real sense of reporting on metrics, reporting on targets, reporting on my data, but actually connecting it back into my business strategy, connecting it back into our policies, how we're actually managing those impacts, risks and opportunities probably wasn't as well described in the reports as we maybe thought it could be. So again, a real opportunity to step back now, having 2 more years, to think about what could my report look like? How do I connect this more deeply into my business strategy and tell a more fluid, a better story in reality?
Yeah. And interestingly, you touched on a few things there that companies should do anyway. I suppose if you were thinking about steps to take in the interim, any thoughts on, say, a no regrets type steps that could be taken anyway?
Yeah, absolutely. Like, we've been thinking about this, and I've been meeting with a lot of clients lately. And, when I asked them about, was CSRD your only driver for reporting? The answer was absolutely not. We're getting asked this from companies we work with, from customers. The demands for sustainability information are coming from multiple angles, from investors, from financial providers, and those demands aren't going away. So if you think about, okay, I have 2 more years to prepare for CSRD or I fall away, at a minimum, understand what your sustainability performance metrics look like for your organisation. So actually, some of the, I suppose, what we're seeing across some organisations now is they're looking at the voluntary SME standard. So it was a standard that was set out by the European Commission, intended to be a voluntary standard for the SME sector. But what they've acknowledged actually is that this could be a very useful mechanism now to set out what are the minimum ESG or sustainability disclosures that I as an organisation should be managing, measuring and reporting on a voluntary basis. And so we're seeing there's a pivot now into, okay, well, if CSRD is not required or if it's going away and all those 1,200 data points, if I don't need to report on them, what does good look like? And VSME, I think, is a fairly solid base. There's about 100 data points in there that organisations should, at a minimum, look to understand performance in regards to those. But it doesn't have all the bells and whistles either. So think about, for your own organisation, are your stakeholders asking for more information from you that doesn't sit within VSME? Yeah. And it's this idea of the VSME plus anything else that your stakeholders might need. So, at a minimum, look to understand those data points. The second area that I would be focusing on, and I touched on it, I suppose, in my previous point, which is building climate resilience. We've seen that increasing climate-related events and our exposure here in Ireland and Europe and globally, there's an increasing awareness that, particularly in the insurance sector, there is increased exposure to climate risks. Yeah. It is going to be an increasing cost of doing business. So at a minimum, again, looking to see, do we understand the climate change risks and opportunities for my business, for the organisations that I work with, and looking to map those out and chart the course, I think is going to be particularly important. And then the last thing I'll say is around supply chain. So we're seeing a real shift now into understanding, well, actually, are there risks in my supply chain or in my value chain, particularly around human rights or environmental related risks that are maybe uncovered at this point that could potentially expose me from a reputation perspective or a brand perspective. So actually looking at supply chain sustainability and thinking about, do I understand my supply chain? Have I mapped it out? Do I understand my risks? Do I understand my exposure points? And actually maybe coming up with a programme of working with, your top 10 suppliers to see how can I really move the dial on the key impact areas that we see across the supply chain, and actually collaborating with suppliers, with value chain actors to really try and drive improvements. That's where you turn the dial from just reporting on sustainability and reporting on supply chain sustainability to actually truly collaborating with suppliers or with value chain actors on your sustainability programme. I think it's going to be much more impactful.
Yeah. I suppose we might just try and summarise where we're at. So I suppose if I was to take away, some of the key points from the discussion, I think maybe if you're a Wave 1 reporter, there's a huge amount of information, I think, in the benchmarking analysis we've done in that report. So there's probably some key learnings and areas of refinement, I would say, that firms could look at. I suppose then if you continue to expect to be in scope, albeit the thresholds have not been, finalised yet, the key message I'm taking from what you're saying is probably to stay the course, continue on track, albeit with a slightly longer time frame. And then I suppose the companies falling away, you mentioned the, some of the actions they can take there as well, and just touched on it there in terms of the voluntary piece, but also I suppose we need to be cognizant of central bank and requirements in relation to some of the climate risk guidance that they would have published. So maybe just to expand on it for that tranche of companies and what they can do next.
Yeah, absolutely. So, the Omnibus proposal does not mean stop moving.
Yeah.
Right. It means we've given companies more time less reporting requirements, those obligations will still be there, certainly for the Wave 1 reporters. So, looking at, if you're a Wave 1 reporter in particular, looking at your sustainability statements that you've already prepared and published, how can I improve the sustainability statement through from the double materiality assessment to improving the robustness of the data and the metrics and disclosures to sit within that, and also looking to see how do I connect this more in with my business strategy.